Rates are going up 3/4 of a percentage point, the largest hike since 1994. And after several difficult days on Wall Street, stocks reacted positively to the news, with the Dow, S&P 500, and NASDAQ all closing higher. Chris Welch here now to explain more about what's been going on and what kind of impact the new rate hike is expected to have. Chris.
Yeah, Stephen Horry, this is the biggest interest rate hike in 28 years. The hope here is that by raising rates 3/4 of a point, they can cool off demand just enough to make a difference in the prices we're all paying, but do it in a way that does not send the U.S. into recession.
I will begin with one overarching message. We at the Fed understand the hardship that high inflation is causing.
Hardship just about everywhere, from the produce aisle to the pump. But it's a hardship that Fed Chairman Jerome Powell admits he thought would have been under control by now.
By this point, we had actually been expecting to see clear signs of at least inflation flattening out and ideally beginning to decline.
But when they in fact saw the opposite, a 4-decade high jump of 8.6% in May, he says they had to act in a big way. Raising interest rates increases the cost of credit throughout the economy. And by doing so, both businesses and consumers choose to purchase less, decreasing demand and ideally resulting in a cooling of the economy. A rate hike of 3/4% is a jump we have not seen since 1994.
We're strongly committed to bringing inflation back down, and we're moving expeditiously to do so.
But bringing inflation down without bringing the economy into recession territory is a tricky tightrope to walk, says retail expert Richard Kestenbaum.
They want to cut it just enough so that we get what is now referred to very often as a soft landing. That's a really delicate operation, and no one knows whether they can do it or not.
The worst mistake we could make would be to fail, which it's not an option. You know, we have to restore price stability. We really do.
And today's hike is more than likely not the last rate hike, not by any stretch. The Fed will meet again at the end of July, and the expectation is they'll likely raise rates again. Another large hike of 3/4% is not off the table. Stephen, Lori, back to you.
All right, Chris, thank you.